And other than that, a couple of stocks are also in focus. Let's pull out KEC International. That one had a steady second quarter earnings, and we have the management joining us, Mr. Rajeev Aggarwal, CFO at KEC. Mr. Aggarwal, hi, welcome to the show. A very happy Diwali to you first of all. And to start with the Q2 earnings, how did the quarter pan out for you?
The quarter has been very impressive, Shefali, for us. In fact, we have clocked a growth of 13% on the top line and a EBITDA growth of 17%. Although the PAT was little lower, but that was largely because of the interest outgo has increased due to the increased interest rates in the markets all over the globe.
Sure. Sir, if I take a look at the transmission and distribution segment, that one was a bit sluggish this time around. So could you talk about that? What's ailing this particular segment?
See, basically what had happened that, although the transmission and distribution segment, we have secured a significant amount of order intake during the year and also in the previous year. So our order intake for the year was close to about 8,000 crore, which depicts a growth of 38% year-on-year for the 6 months period. In terms of the revenue, there have been some challenges. Reason being that in the international order book, there was, there was some slack last year. So there was some lack of orders in the international market last year. So plus most of the orders that came in the international market was towards the fag end of the year, and also we have received a few of the orders in the current period. So the execution will take some time. So we expect that the execution of the T&D should happen in Q3 and Q4, and we should be able to deliver a growth of close to 8 to 10% for the year as a whole.
Sure. So help us with an outlook for the non-T&D segment as well. What's happening currently there? How did the quarter pan out, and going forward, what can we expect from the non-T&D portfolio?
See, as we have been guiding the market, our non-T&D portfolio has been growing very well, particularly the railway business and the civil business. Railway business has clocked a growth of close to about 150% for the 6 months period. During the quarter also, in Q2, we have clocked a growth of 250%, a revenue of 421 crore. The 6 months period, we have clocked a revenue of 750 crore in the railway business as against 850 crore revenue last year. Similarly, on the civil vertical, which we launched last year, this year in the first 6 months period, we have already done a business of close to 230 odd crore. So our idea is basically to take the non-T&D vertical to close to about 40% of the overall KEC revenue, and we are on track of that. Current year, we are looking at a revenue of again doubling the revenue in the railway business to about 1,500 and 1,600 odd crore. We are looking at a revenue of close to 500 crore in the civil vertical. The cable business has also done very well and has clocked a revenue growth of close to 14% for the 6 months period. So we expect, in line with our strategy, our non-T&D revenue should continue to be a growth driver for the company, although the T&D revenue will also grow at a normal pace of between 8 to 10%.
Okay. Sir, also we understand that Adani Transmission is going to acquire KEC Bikaner Sikar Transmission Private Limited. So could you give us some more details about that? What is this going to do to your books going forward?
So this is a BOT asset which we had bid out in 2015, and this was a state asset which we got implemented last year. So we completed this project 4 months ahead of schedule. It is a 172 kilometer transmission line from Bikaner to Bikaner in the state of Rajasthan. We started earning the revenue from this asset from December 2017, and we are getting good profitability out of that. But since it is not a core business to own a BOT asset, so we decided to sell this asset to Adani Transmission at an enterprise value of 227.5 crore.
All right, Mr. Aggarwal, thank you so much for taking us through the details of the second quarter and also for that deal. And once again, a very happy festive season to you. And with that, we'll slip into a short commercial break.